In this video, I want to discuss highly accurate buy-sell indicator on TradingView that perfectly shows us possible changes in the direction of the market. To add this wonderful indicator to our chart, here we click on indicators and we search SMI MFI, this one. Stochastic Momentum Index of Money Flow Index, which is an editor specs indicator and it's written by someone named Andre007. Alright, this is the indicator, and as you can see, it's in the form of an oscillator, and these lines and histogram are moving above and below the center line, which is 0. This indicator is combination of two powerful indicators. One is Stochastic Momentum Index, which is a powerful indicator for measuring momentum, and the other is Money Flow Index, which is a powerful indicator for measuring buying and selling pressure, so we know which way the money is flowing in the market. And now by combining of these two indicators, we have an extremely powerful indicator that helps us with the price direction and market strength. In this indicator, Money Flow Index is used as an input to Stochastic Momentum Index. This means that the Stochastic Momentum Index is measuring momentum based on buying and selling pressure rather than just price, and this is the point that has made this indicator so powerful. Alright, now let's see what we have here and how this indicator can help us in trading. This line is SMI MFI line, and this line is signal line, which is actually moving average of this line with length of 8, and the area between these two lines are colored blue and red depending on which way the crossing happened. When the SMI MFI line crosses above its signal line, it's a bullish signal and the area becomes blue, and when the SMI MFI line crosses below its moving average line, it's a bearish signal and the area becomes red. We have also a histogram here in the center of the indicator, which actually shows the momentum change between these two lines. The bars in the histogram are actually measure of the distance between these two lines. When the two lines are getting closer to each other, you can see we have smaller bars, and when the lines are moving further away from each other, we have larger bars. And the point that we have crossover of these two lines are actually the point that the histogram goes above and below 0. So when we have bullish crossover, the histogram goes above 0, and when we have bearish crossover, the histogram goes below 0. The structure of this indicator is exactly like MACD indicator, but here we are working with different parameters, and also we have some meaningful levels. If you're familiar with Stochastic Momentum Index, so you know that minus 40 and plus 40 are important levels, and crossing below plus 40 is a sell signal, and crossing above minus 40 is a buy signal. Here also we have the same setup, but one excellent point about this indicator is that we are not limited to fixed minus 40 and plus 40. Instead, we have a dynamic zone, which these top line and bottom line are moving around plus 40 and minus 40. Similarly here, when the price goes above the top line, it's considered overbought, and crossing below the top line is a sell signal, and when it goes below the bottom line, it's considered oversold, and crossing above the bottom line is a buy signal. Please pay attention that not any of these crossovers are suitable for trading, and we need to filter the bad signals. So make sure you watch this video until the end, because I'll teach you how you should use this indicator in practice. If you have noticed, when the line goes below the bottom line, and while it's below the bottom line, we have this red area, and when it goes above the top line, and while it's still above the top line, we have this blue area, which shows excessive buying pressure. So these colors can also help you to know what is going on in the market. Another important level is 60, plus 60 and minus 60. When the indicator passes the plus 60 level, it's considered extreme overbought, and you can see that when we get crossover with its signal line, the indicator shows a small circle like this, which indicates a strong signal. We have the same on the other hand. When the line goes below minus 60 level, it shows extreme oversold condition, and the crossover with its signal line is considered a strong signal. But as I said, not every signal is suitable for trading, and they may just show a pullback or pause in the current direction of the market. So we need to filter these signals that are against the current trend of the market. If you're an experienced price action analyst, so you can easily identify trends and only take the signals that are in the current trend of the market. And if you prefer using indicators for this purpose, you can use directional indicators to help you on this. For example, here we click on indicators and we search pivot point super trend, this one. which is an excellent indicator for identifying trends. I have a complete guide on this indicator. The link is also placed in the description of this video, and I highly recommend you to watch it later because it's a very useful indicator for trading. Alright, as you can see, starting from here, since our pivot point super trend is red, it means we are in a downtrend, so we focus only on selling signals where SMI MFI line crosses below the top line. You can clearly see that after each of these signals, the market went down as it was expected. In this situation where we are in a downtrend, we don't care about these buying signals, and you can clearly see that after these buying signals, we just had a pullback or small pause in the current downtrend, and if we entered on each of these buying signals, it would end up with loss since our stop loss would trigger shortly after that. And on the other hand, when the super trend is green like this part or this part of the chart, in this situation we only focus on buying signals because the trend is up, and we don't take short position signals because as you can see, they just show a pullback or pause within this uptrend. By the help of this method, I mean trading in the current direction of the market, you can clearly see that many of the bad signals are filtered and we are only focused on the signals that are in the current direction of the market. As you know, any trend will finally stop and reverse the other way, and this indicator can also help us with this. When there is a divergence between this indicator and the price movement, it gives us the possibility that the trend is weakening and probably we are going to have a reversal. For example, here you can see that the price made higher high, but at the same time our indicator made lower high. This shows that the upside momentum is weakening and the downside momentum is gaining strength. You can clearly see that after this divergence, the market went to a trading range. The market is completely flat here, as you can see. After this flat market, again the price advanced, and if you look at the indicator, you can see that it made lower high and it's going lower, while at the same time the price is advancing. This shows that the downside momentum is gaining strength and this uptrend is weakening, and the probability of having reversal is very high. After this divergence, you can see that the price again went to a trading range. It couldn't break the previous high, and from this point it was the starting point of this large downtrend, as you can see. For another example here, for this trend reversal, you can see that we had divergence before the reversal happened. The price made lower low, but our indicator made higher low. This shows that the downside momentum is weakening and the upside momentum is gaining strength, and this gives the possibility that we may have a reversal. Please pay attention, I said possibility, and it's just a possibility and nothing more, because we can have a divergence like here and it can be just a sign of a pullback. The trend truly weakened and the price advanced after the divergence, but it was just a pullback. So when there is a divergence, it doesn't necessarily mean that an instant reversal is going to happen like this case, or the market is going to go to a trading range. This divergence only means that this trend is weakening, and this weakness can end up just in the form of a pullback. So for any trading decision on reversal point of the market, your reversal trading strategy must also confirm that a reversal is going to happen. So just like any other tools in technical analysis, you should never take your trading decisions only based on these signals or divergences, and you must use this indicator in conjunction with other tools and aspects of technical analysis. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.